We're seeing the Nikkei do fairly well, 1.6% gains out there, some weakness seen in the yen as well.
The deal honours the referendum result and is good for both the UK and the EU.
What we have right now is a liquidity-driven rally.
FIs are getting a little more comfortable about the political risk in India.
It's 0.6 higher, 11,237. That's the first trade, 70 higher on the Nifty.
We continue to be reasonably positive about emerging markets.
Etihad seeks to cap its shareholding at about 24.5% so as to not cross that 25% threshold, so it does not have to make the open offer.
11,300 nearly on the Nifty. The Bank Nifty is coming within sort of its all-time intraday highs.
Bharti has transferred 32% of its Bharti Infratel stake to its wholly owned subsidiary called Nettle Infra.
We're up about 120 odd points on the Nifty. The Sensex has risen about 400 points odd.
Okay, what a turnaround it's been for the market. 2 weeks back, just 2 or 3 weeks back, we were staring at 52-week lows in the mid-cap index, the Nifty Junior. And now, one of the large indices has already made an all-time high. That's the Bank Nifty. In fact, as we start closing bell, we have the Bank Nifty at all-time high. Let's see if the other indices follow suit or not. This is Closing Bell. I'm Anuj, and with me today is Sonia. Hi, Sonia. Good afternoon.
Hi, Anuj. Good afternoon. As we were talking about it in the morning, right? It's a matter of when and not if.
Yes.
The market hits an all-time high as well. But stellar moves today, especially in the banking space.
Not just today, but if you see the recent move, this is now a rally where you're feeling good about this rally.
Yeah.
Last rally, everyone was feeling miserable. This time, you're feeling miserable if you missed out. This time, you're not feeling miserable for not, for your portfolio not rising. Your portfolio should have rallied in this market. Everything has rallied. It's been a across the board secular rally. Like we discussed in the morning, there's not a single Nifty stock which is within even 10% of 52-week low. Yeah. At least every stock has rallied at least 10% from 52-week lows. Let the stats come up for you and you will see. Basically, if you see the mid-cap index, the Nifty Junior from the lows that you've seen the kind of rally, I think the mid-cap index is up some 13%. Junior is up some 13% as well. I don't know why the graphics are not coming. That will support the thesis that we're trying to say. And if you see some of the individual stocks, like there's a Dish TV, which is up 100%, CG Power up 87%, there's Reliance Capital, Sonia, which is up 87%, India Cements and L&T Finance. Essentially, the genesis of this rally is in the kind of oversold market that we had previously.
Yeah.
There was so much skepticism. And remember the day when the number of stocks hitting 52-week low had reached that 500 number.
Yeah.
And the market was falling on very low volumes. It was a matter of who buys first. And right now what you have is this carry trade. I think today's number could be as big, going by the kind of volume that we have in Reliance, IndusInd Bank, which has come out of nowhere, Kotak Mahindra Bank. I think the kind of buying that we're seeing in some of these names is quite big. And of course, the political situation is looking more benign than it has ever looked over the last 1 year. So good going. I think fresh expansion phase, and 11,500 now looks like a matter of time.
Yeah. Also, I mean, look at the cash market volumes, right? Almost 32,000 crores is what we've seen in terms of cash market volumes. I think it was just a matter of breaking out of that 11,000, 11,100 mark, which was a resistance for so long. Now that it's broken, Anuj, do you think it could be a trend, an upside trend that we're seeing in the near term?
Today, I would say is even better than yesterday because, this is at no point has the market given you any dip. It's just one way. And, that's why, like we discussed in the morning, why do traders buy breakouts? Because so many breakouts fail. But when there's just that one breakout which doesn't fail, it leads to this kind of... It's like hitting a jackpot. Exactly. It leads to this kind of move. That's what's happened. I can tell you, Sonia, people have made a lot of money over the last 10 days in this market, and the market gave you an indication of that. The market had given you reversal signs. When with all these advanced decline, cash market volumes, everything was in place for this rally. Now, you don't want to preempt where it stops. That's one thing that you don't want to do. Respect the screen. And now I think this market is not going to be charitable to give you a large 300, 400 point dip. Perhaps 50, 100 points at best, and the market's ready to move on. Global screens have also turned, right?
Yes, we are not alone in this party.
We are not alone in this party. But because we had underperformed so much year to date, the
bounce back is sharper.
The bounce back is sharper. It's like, looking at a basket of stocks and saying which stock offers you the best risk reward right now. It's like that. That's playing out right now.
Oh, India is that stock that offers you the best risk reward. All right. Well, we have still 1 more hour of trade, and it's looking pretty sharp at this point, especially for the bulls. Let's tell you what's lined up on the show in the next 1 hour. It's green across the screen. No two ways about that. Benchmark indices trade higher by 1%, driven by strength in Reliance, L&T. The Nifty Bank, more importantly, has hit a fresh all-time high, led by ICICI Bank and HDFC Bank. The mid-caps underperform marginally. We'll discuss the market fundamentals and key trends with SP Tulsian of sptulsian.com, market expert Anand Tandon and Devin Choksi of KR Choksi. And FI flows into India have surged once again. Our investors looking at India favourably. We'll get you the FI view with Ayan Mukhopadhyay, the Director UK and Europe at IIFL, as well as Jonathan Scheisel, the Senior Vice President of IIFL AMC. And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
Okay, how should you position yourself in this last hour? We have Sudarshan Sukhani and Mitesh Thakkar now joining us with closing strategies. Good afternoon. Sudarshan, it's been a dream run, right? The amount of gains in the Nifty, Bank Nifty, everything moving, a trader's delight. Your thoughts on how to approach this market from here on, and what would be your stock calls?
Well, Anuj, you've described it very well. It's been a dream run. It's been a dream run, first, of course, because the rally has been stupendous, and second, because I hope and guess that most traders actually caught the rally. So it's been a perfect trade for many, many months. Now, the stops that we had have not been touched. That's also one of the advantages of this particular move. I think you should stay long. Just raise your stops to 11,250. It's as tight as it gets, but don't get out of the trade. We haven't got out at 11,100. We didn't get out at 11,200. Who knows where it will go? So stay long in the Nifty and the Bank Nifty with this stop loss.
Okay, well, Sudarshan, kudos to you. Congratulations. You got this call bang on from the word go. And I'm sure a lot of our traders and retail investors who would have watched the screen would have benefited quite a bit from your view to stay long and have patience. Mitesh Thakkar also joins in. Mitesh, you've been bullish on the market as well. At this point in time, what would you do? And your views on the Bank Nifty, more importantly, that has hit that 28,400 mark for the first time ever.
Yeah, Sonia, I think, good afternoon. So we've been bullish. We did, take some profits today early in the morning, and I think I was hearing Anuj talk about the fact that we should not guess stop. I think clearly does suggest that we will see higher levels. You've rightly picked out the Bank Nifty to be the index to watch out for, getting past the early highs of 28,300, 350, which were the closing highs, not the intraday highs. But I think that's clearly a significant thing, and that's happened with the gap today. I would be quite positive. Look at 28,700, 29,000 as the logical next targets, but maybe we might go beyond that, especially given the fact that a lot of private sector banks are now showing signs of further upward side traction on the charts. So in that sense, I think if somebody wants to trade, take a fresh trade on the index, the Bank Nifty would be the logical choice. Take a 120 point stop loss from here, and I think 300 to 350 points would be a minimum target. Maybe more can happen. That apart, my trading calls, I have a buy on IndusInd Bank with a stop at 1540 for targets of 1610, and it's moved up slightly. And ICICI Bank is a buy with a stop at 379 for targets of 400.
Okay, Sudarshan, I think we have to get your stock calls.
Oh yes. Well, you really need to buy whatever you can. Some of the stocks that are still giving us signs of a breakout or a continuation of breakout are here. One of them is HDFC Bank. In the morning I talked, as Lata asked me, I said this is one bank that should do very well. It's in a trading range. It's broken out, and probably one of the reasons why the Nifty Bank is doing so well. Hero MotoCorp is another buying opportunity. Same pattern, a dip, a trading range and a breakout. And Tata Chemicals is a short sell. I thought with all this exuberance, it makes sense to bring a short sell now. I mean, this market will stop somewhere. So let's balance it out, but pay attention more on the longs.
Okay, pay attention more on the longs is the call. The one missing piece in the puzzle for JSW Steel, just look at that stock. It's a fresh breakout after a long time. This is one index stock where you're seeing quite a bit of buying. Just look at that move on JSW Steel. This is big move happening on the stock at this point in time. SP Tulsian of sptulsian.com and market expert Anand Tandon now join us on the show. Good afternoon. Mr. Tulsian, fresh all-time high on the Bank Nifty. it's been, like you describe it, buying coming back with vengeance. But how much more from here on?
Anuj, if you really ask me for the near term, because I've said on 20th February that yes, the things are seen to be quite positive. On 27th morning, I've given the buy call on cement stocks, and many cement stocks have risen. But if you really ask me for the near term, maybe for the next couple of days, because I have been taking a call that advanced tax selling will be seen, and that is actually seen coming in the form of the negative cash selling seen by DIIs, which have been largely offset by the huge buying by FIIs. But probably at the current level, I'll be a bit cautious. I won't hesitate in maybe going short for couple of days, though I don't give the trading call. Those are the prerogative of the technical analyst. But I won't be hesitating, because if you really take a call now at 28,400, I don't think, because take the case today for the bank nifty gainers. ICICI Bank contributed 150 points, HDFC Bank 100 points, and IndusInd, Kotak and the other 2-3 banks 60-70 points. So I can understand for the rise in HDFC Bank, IndusInd Bank and Kotak Bank, but I don't think that Axis and ICICI Bank has much upside to go from here, which will definitely be seeing profit booking, whether that happens after Thursday or on Thursday itself, because generally the weekly option expiry happens a day ahead nowadays. On the day of expiry, you see the range-bound behavior. So I'll be keeping the near-term cautious view on these banking stocks. Maybe HDFC and Kotak deserves buying further. Let's wait to see the judgment of the Bombay High Court today in the Kotak promoter shareholding also, which I don't think that anything will be seen, any outcome will be seen from there, positive any outcome. Maybe the matter may get adjourned also. So taking all this into consideration, Bank Nifty, I'm definitely keeping cautious view. But yes, the positive bias remains continuing on the overall market. But let's not forget, this all weekly option expiries are really playing a big game nowadays. And I won't be surprised to see one weekly option expiry seeing huge profit booking also coming in. And it's difficult to take a call whether that happens in the next couple of days or for the next week. But caution is definitely required now at the current level for the near-term investors. In fact, look for ideas in mid and small cap where umpteen number of ideas are available.
I think that caution is well taken, Mr. Tulsi. And look at the rally now, almost a 500-point rally on the Sensex. Anuj, you were making this point earlier in the day as to how this could be. I mean, money is money, but it still could be that hot money, as we call it, the one that can enter and exit very quickly. If that is the case, then do you fear that at some point in time there could be a reversal, maybe post the election rally, etc.?
The only problem is, this could take the market to 14,000 for all you know before that reversal happens. That's why you don't time these things, Sonia. The best way to play this market is to buy good stocks when they correct. Remember, when the market was falling, we were making this point that this is the time to build portfolio. This is the time to build portfolio.
To buy market leaders.
To buy market leaders. Portfolios are built in the time like we saw, a few days back. This is the time for traders. This is the time when you want to buy the breakouts and have your stop losses in place. The market is there for everyone. The market which we had 4 months back was a market for short sellers and a market to accumulate stocks in your portfolio. The market that we have right now is to just stay put in your portfolios and play on the long side as a trader. That's the kind of market that we have. I have no doubt in my mind that things will get just like we saw on the way down, things got excessive. It will happen on the way up as well. But what's that point? So someone who booked out yesterday, will be feeling miserable today. Because from between yesterday and today, the Nifty has added another 150, 160 points. And that's a lot of, market value for your position.
Opportunity cost,
exactly. So, you can't time these things. So the only way is, as a trader, respect the screen, and as an investor, to buy stocks when they are available at lower prices. Now it's easy to look at all these stocks and the kind of gains that we are seeing, but it was tough to buy them, say 3 months back, when the market was making those lows, right? But those who bought them when the panic was there, they are making gains.
And 3 months back, the whole political narrative was also so different, right? I mean, things have changed over the last couple of weeks. I mean, there is now anticipation of perhaps a ruling party coming back to power. So all of that also matters to the market in a big way. But Anand Tandon joins in. By the way, a lot of large caps hitting new highs today. ICICI Bank is just charging ahead. 3.5% higher, fresh 52-week high there. Reliance, Axis Bank, Titan are a couple of other stocks that are hitting new highs today. Anand, the high good afternoon. I know this is a million-dollar question and you may not have an answer, but I'm going to ask you anyway. Would you attribute this rally to a pre-election euphoria, or do you think it's more to do with the developed market versus emerging market trade sort of reversing? And do you think it's a sustainable move?
Well, the first one is a question that, as you mentioned, it's not possible to separate requirements. But I would like to think from a point of view of macros, and it is very clear that what has changed substantially over the last 1 quarter has been the fact that there is now no fear of interest rates going up. There is no fear of balance sheet tightening in the US or in Europe. Therefore, the likely I would attribute more probability to the fact that there is reversal of flows back into the country from global markets into emerging markets across the world, and including India. And of course, that will mean that there is a possibility that there could be a little more leg to the rally, not because there is any valuation gap in the front line, simply because the flow of money will take things up a little bit. Obviously, within that, things like we've been arguing ad nauseum almost, is the fact that corporate banks is where the earnings growth is likely to be the most, and therefore you would expect to see ICICI and Axis Bank and IndusInd Bank and perhaps even SBI and the like to actually lead the rally from the front.
Okay, must say, this move on IndusInd Bank is quite stunning today. Could it be start of something big on the stock? It's been a rank underperformer. In fact, as we speak, the Bank Nifty is at an all-time high, and the IndusInd Bank stock is 22% off its all-time highs. We, forget that, the kind of underperformance that it's seen. And I'm just looking at the volumes on IndusInd Bank today. It's already crossed 1,000 crores, more than that. It's well on its way to perhaps see delivery buying of some 500, 600 crores. So after a long time, you're seeing a bit of a clean move play out on IndusInd Bank. Anand, hi, good afternoon. Your thoughts on the stock, IndusInd Bank in particular?
Well, as you mentioned, it's fallen off the most sharply among most of the frontline banks. So therefore, to that extent, there is a greater scope of it moving up. But on a business perspective, I think if you are looking to play retail, I think you are better off looking at Kotak and HDFC purely from the point of view of the fact that they have been engines which have continued to grow systematically across all kinds of cycles, and there has been there is no reason to change the view on that. And otherwise, as I mentioned, corporate banks pretty much are going to lead as well, because that's where the most of the growth is coming from.
Okay, Mr. Hussain, your thoughts? You reckon it could perhaps bridge some gap from here on as well?
See, Anuj, I think amongst the banking stocks, and more especially the constituents of the Bank Nifty, probably these 3 stocks are looking good. IndusInd Bank, Kotak and HDFC. HDFC Bank and Kotak more on valuation, and IndusInd Bank not having participated. And if you really see the Q3 numbers, there was no kind of disappointment which warrants this kind of corrections. And in fact, the IndusInd Bank has not participated in this rally, maybe in this last couple of months, almost couple of months post the announcements of the Q4, Q3 numbers. So thus, yes, this is seen a value buying and catch-up rally now seen happening in IndusInd Bank.
Mr. Tulsian, before we take the break, I also wanted your thoughts on Reliance. I remember when we were chatting post the earnings, you did mention that, not just the telecom as well as the retail business, now even the refining business this time was much better than expected. Since then, it's been a one-way rally for Reliance Industries. At this price of 1,300 plus, does the risk-reward still look favourable?
See, Sonia, it's a matter of taking the time horizon, what a time horizon an investor has. If you really, because that's what we have been saying, that we are, in fact, earlier we gave, I remember earlier we gave the timeline of March 21, to company to see 10 lakh crore as a market cap, which we preponed by 1 year, that is March 20. We are likely to see the market cap of the company at 10 lakh crore, and which we maintain the same target. But if you want to take the near-term call, my positive bias, or the thesis of taking the positive bias on their conventional business, that is petchem and refining, was more on the refining margin having doubled the Singapore benchmark this time. Generally, they always have a premium of about $3 per barrel, but this time it has almost doubled by $4.5 per barrel. So this has been really seen quite good. Though on a comparable basis, you may find the refining business having disappointed. I'm specifically referring for Q3. But yes, going forward, things are looking quite good. But in the near term, because if you again see the pattern of the rally in this last maybe couple of weeks of the start of this series, Reliance Industries has contributed a lot. But I think maybe at 1330 now, having moved to 1330, 1340 to 1350 seem to be near-term resistance, and I won't be surprised to see the profit booking coming in, which may make the share to fall below 1300 just as a tactical trade for Nifty adjustments, nothing else. But our positive bias continues to remain on the stock.
Okay, well, we'll come back and chat more about the markets. For now, it's looking like a phenomenal run if you're a bull in this market.